Do, boys? Another day. We're back in the stream. You know what it is. Another day trading day. And I just started. Woke up early today before the alarm, like 8:10, 8:20. Completed our morning routine. Only thing left to do is to pray. So I thought I would start and say a prayer here today. So, said a prayer on stream. Thank you, Lord, for waking me up today. Thank you for keeping me healthy. Thank you for protecting my family, keeping them healthy. Bless them and allow them to have a good day. Thank you for providing me with your strength and guidance in life, keeping me away from distractions, keeping me on a clear and straight path in life. I appreciate this so much. Thank you for helping me to understand my purpose and waking up every day and improving 1% better every single day. Please take care of the people less fortunate of me, the people less fortunate around me, and if anyone around me is going through any struggles or hard times, please relieve them from their struggles and hard times and bless them with your wisdom and your strength. Amen. Simple little prayer. Got that done. Now we move to our trading automatic habits. I'm thinking about making a YouTube video as well about how to change your life in 30 days because I'm on day 20 and I can already feel my life progressing quite fast. So live stream trading session. Now we got to do our trading prep on our 15-minute price action. So let's get to the charts. Let's get to the charts, y'all. Get to the charts. First, let's check, do we have any news today? 8:30 news. It's Friday. Holy shit, we had a lot of 8:30 news, then we have 10 a.m. news. Let's see what the markets are doing. Oh, they're already trending. Markets are already trending. Not a lot of volume though. Let's put this in a full screen for everybody. So we're already in that trending phase. What I'm seeing right here is we were in a range. Price started its range like that. And we broke and we were trending. This is at like 4 a.m. we started trending, so there's no way I would have been awake for that. Yes. This is quite different. This is quite interesting because so far this week, before 9:30, the price action has been mean reverting before it would trend. Right, but now we're just in the trend already. The volume is super low. So let's see what Bitcoin did yesterday. Made a dip then broke up. Ethereum just continued its range. Gold broke out. It's quite interesting because I stopped looking at gold once 9:30 hit. Like 30 points. Something like that. So gold looked like a trade. Silver, I think, broke down and came back to its range and grinded up. Okay, so we're already in the trend. Like, we're already in a trending environment on the 15-minute chart, and we should already be trending on the 1-minute chart as well. Yeah, our system fired at 8:30, but we're just gonna wait and see with what's going on. The markets looks like harmony for the upside. Look at these beautiful price action reading though, it's just wonderful. This was the trade I missed out on. This was the trade I took yesterday. Sort of mean reverting. So we're just gonna wait for 9:30, and the lesson that happened yesterday over here was to wait for candle close, because we ended up taking profits early, but we would have easily hit our full take profit, if we just had waited for that candle close. Because if we look at these order flows right here, this second bar was bullish, and then last minute it flipped bearish, so we were in harmony on candle close for a more bearish momentum, and we closed out too early, which is fine. Still a profitable day, but we had to be patient and wait for candle close. So that's the lessons of today. So the trading prep is done. Trading prep, 15-minute price action. Okay, we did that. Promise to follow my system rules. I promise to follow my system rules. My basic system rules. The higher time frame 15-minute chart is in a trend. Then we go to the 1-minute chart. Then we go to the 1-minute chart and see if our system on the 1-minute confirms that we're in an uptrend or that we're in a downtrend. And then we enter on the slightest pullback, and that's the system. It's super simple. Promise to follow risk management rules. The risk management rules, we're going to allow myself 2 trades today. We put a trade on. Once that trade is at a 1-to-1, we move stop to break even, so we're at a risk-free trade, and we just basically manage it from there. We go to the 15-minute price action, see if it's still in a trend, look for harmony or divergence on when to exit. That's basically it. And we have to wait for our candle closes. There we go. There we go. So we just have to continue to wait to see what price is doing. In the meantime though, I'm going to see what my professor is saying, what he's seeing today on a Friday.
And I think we're going to end the week probably in consolidation. Certainly for Bitcoin, it looks that way. And I say crypto as an extension of that. Yeah. Top 3. Others. Mostly consolidating after taking out December highs, or in the case of others, November highs. just local highs. Pulls back, choppiness, BTC range bound. ETH couldn't even get to December highs. And despite the absorption of selling yesterday, we didn't see any strength. So there was more ETF, continued outflows. You could see that Coinbase had that persistent negative premium right through the session. And still trading lower than Binance, even now, deeper again. But I think now that selling's really starting to break. So that's all we got for the bounce. 92 seems to be a level price can't get to. And we're probably slowly going to make our way back down towards the 2026 lows. With big news catalysts coming today, or at least potentially, which are going to be more of a market mover. In particular, the Supreme Court tariff decision. So leading into that, ES looks fine. Gold is holding up all right. Nasdaq lagging overall, still at this same as like it is on Qs, where it has to get above 630 on QQQ. For the NQ future, same thing. It's around 26. It's below 26,000, and it's right at 25.8, and it keeps projecting off that. But it is holding, just waiting for a catalyst either side. And it's been a while since we've seen any real movement out of that. For stocks, it's been more so lower, mid and lower caps that have been running. And for silver, seeing it actually coming back up above 77, that's that important level. End of the week for all of those. So end of the week for TradFi, last day in the stock market. Futures close at the end of session. So looking ahead at weekly closes for those, how they're going to look. For gold, 4,400 is the level. Silver, I think 77, above 77 would be a decent weekly close, despite having that failure of the highs. It would keep them at least in early consolidation, if not immediately avoiding any decline. For stocks, taking out the week, taking out the highs, and so far failed breakout. QQQ just consolidating, and obviously crypto flat. So going into today, two things. So we had those outflows in Bitcoin. We have employment data, so non-farm payrolls, and then the unemployment rate. That's coming an hour before the session, so 1:30 UTC is the time for that. The usual 1 hour pre-New York session. And then following on from that, you're going to have 30 minutes after the open. So it's at 10 a.m. in New York time, which is going to be 3 p.m. UTC. You have this Supreme Court. So it's going to be a Supreme Court ruling about whether the tariffs that Trump put in are essentially whether they're constitutional or legal or whatever, whether he has the authority to do it the way he did it. So basically, are they going to rule for or against them? And that's going to be what has the market moving potential. Big day for volatility. You know what happened last year with tariffs. We may see a mini version of that this year. Last year, right at the beginning of the year, you had Trump come in, begin to talk about tariffs and then start to implement them, and then the markets, first of all, thought he was bluffing, and then realized wasn't bluffing, and then was bluffing him. But it caused enough of a volatility shock for structures to break and then momentum to take over, and a reset that was needed, just to pull back after an extended uptrend. The reasoning being tariffs back then, but pulling back maybe not as deep as that if it wasn't for the catalyst, as deep and as fast. But a pullback nonetheless was pretty normal and nothing crazy. And where we are right now as well, having a pullback or having some kind of corrective move would not be out of the ordinary. It would actually seem very extreme, even just to go back to the support, which it was at in October and again in November. That would seem like a huge downside move, when in reality it actually wouldn't really be. It would be nothing in the grand scheme of things. So it's interesting to see. I think downside, I think this market is, I think it's only 4% pullback. I think this market, same thing for Qs, just pulled back to, even did pull back to November lows. Market's prone for a pullback, I think. You can see some early signs of weakness in that with things like Nvidia. So Nvidia's been on a week where it had some positive potential catalysts. It's breaking the wrong way out of this consolidation on the daily. And you've had things like Google as well, making new highs, but then rejecting. Pre-market, it's trading up at that level. See how that goes going into it. Weekly close isn't in yet. See, can it close the weekly above the highs or not? We need a strong session to get there. And you've seen a few of the others already significantly rolling over, as Apple has done. Seeing now if that's going to get, if that dip's going to get bought and keep it in an upwards trajectory with a consolidation towards these highs. But you can see the pullbacks. So tops are in for most of these in the short term, and these are the majors. So these are like the Mag 7 and the leaders, and have been topped out now for a number of weeks, some of them months even, and some of them seem to be in the process of doing that. And because they are the vast majority of the index, they would heavily weight up the index for SPY and for QQQ. Any sustained pullback should drag the market lower, which wouldn't be the worst thing. I think it's more so that there's going to be a lot of positioning at these highs that's prone to even a relatively small pullback, like even back to 6, 7, 4, is like nothing in the grand scheme of things. Like small, tiny pullback, but I feel like it would have an outsized effect. Seems like the market is really betting long this year, and very similar to last year. Last year, nobody could even imagine the market going down somehow, because it's like Trump gets in, it's going to be up only. And Trump got in, and it went up and failed the highs, and then we had a sell-off. So this year, maybe the downside comes earlier, and we get a similar type of move. I don't think it'd be anywhere near as deep if we do pull back, but I think conditions are there for a pullback. And I think today, with this, not necessarily because of this, but it's going to be a catalyst that will allow the market to start moving, and what follows on from it. Maybe we see the next directional intent from that. As it stands right now, 25% chance that they're going to vote in his favor, which would keep the tariffs. So you're also going to have all the different interpretations of what that means. Because obviously when Trump put tariffs on, the markets went down. So the basic view is that the tariffs are bad for markets, but that's not necessarily true. It's more so the nature of them, the size, the scope of them, and also whether they're expected or not, what can be priced in. So if the market, as it seems to today, which probably is why you're seeing fairly strong markets leading into this, you're not seeing too much, except for, again, I think like I would expect that if this was going to be a positive, right? If the Supreme Court goes against Trump, which is most likely, at least the odds say, 75% chance that it's going to get ruled against, which is supposed to mean that the tariffs they've already collected have to be refunded, which is nearly 200 billion that they've collected in tariff revenue last year. They're not going to do that. But it would mean they're not able to bring more in or to find some other way. What it's going to do is going to probably create like roadblocks and slow things down and make things more awkward. So the main thing with that, and I'll cover it on Trade of the Day, more so with the low time frame, is that it does matter, obviously, just like the whole tariff stuff last year mattered. It doesn't matter as much, anywhere near as much. That's my main view on this. If you're looking at like between, let's say, Bitcoin, between stock market and BTC. So from last year's move, first of all, Bitcoin's already down, stocks are not. I think that any pullback that comes, if it comes, is secondary to the actual reason. The reason doesn't matter. The reason will be applied afterwards in hindsight, as it always is. And the actual directional move is going to be based on, as it always is, positioning and flows in the short term and the medium term. So at the start of last year, market was much more prone to a correction, given that we'd seen a failure on Trump's inauguration to break out for Bitcoin, and we'd also seen failures to make new highs in stocks. So good news, Trump went in, failed to make new highs, and by the time they really put the tariffs in place, you'd seen price losing momentum, losing 100k for Bitcoin. You'd seen a second rejection in February from SPY, and you'd all this built up leverage, you had all of this pent up demand that was overly positioned at the highs. And in a normal pullback, that may have just came like to 50 on SPY, a bit like it did with BTC. BTC's pullback was fairly normal, just back to where the 50 is. Just that extra additional week or two made it historic. That was just like, that's what took it from being just a regular correction to proper panic. And you don't get those very often. You got COVID. Before that, you had a very minor, also kind of similar catalyst in 2018 with Trump and the government. Around then, you had government shutdown and all the stuff about trying to put in tariffs in his first term. So it's not something that you'll see very frequently. Markets only need to reset every now and then. That's really all it is. The reasoning behind it, why, is because over time they go up, and over time they go up. Because they go up, they get overly positioned in one direction. So if you imagine stocks coming all the way up, a lot of longs get flushed out, taken out, shaken out, don't get in, don't re-enter, can't re-enter, won't re-enter, afraid to re-enter, still at resistance. Some will start to re-enter, start to get more confidence, and then really the majority will be coming in here. As always, the longer something goes up, the more longs will build. And then there's a reset needed. And we had a pullback in October, November already. That produced a nice reaction back to the highs, but no follow through as yet. So given the build up of these longs, that's why I think back to November's level would make sense, even just for a dip. So if this was already the beginning of that correction to reset or to consolidate positioning, then only those from the lows of November that are adding into the highs, December and into January, a pullback there could reset some of that short-term positioning. And from that point, you'd reassess. Like that's the same as when price pulled back in here, or in any of these moves, when price starts to pull back, like in April 24, it had been going up steadily from December through January, February, March. It just needed to reset some of that positioning. That could have went all the way to 450, and it didn't. just needed to reset positioning back to the 20 EMA, back to February levels, on it goes. So if there is a pullback, we'll just be watching, first of all, around the November lows level, the 20 EMA first. And for BTC, I don't think that's as much of a factor because we've already seen certainly the long side leverage, the speculative positioning has been taken out for the most part. Now you've got more of the longer term built up, cycle longs, like the addition of long exposure throughout the cycle that's still there. A lot of it's spot, a lot of it low leverage. Not so much a market that's prone to a leverage flush, more so just a bearish market already that may reject easier or see follow through selling easier, as if Bitcoin starts to lose 90, lose 88 or 87, you could see some follow on selling from that just based on the current structure. So those are two big things: an hour before the session and then 30 minutes after the open. I'll cover those, break them down, and trade of the day. Jim.
Good morning, sunshine. Mortgage your house and buy Bitcoin with breathe air. There's no second best, okay?
GM. All right, so we've seen the move. Main move, which is Bitcoin rejecting that 93, 95 area to the downside first, and then a second leg follow through back to where we were clustering at the top end of this Christmas week and New Year's week squeeze of volatility. Expanded from it, reverted back. Still holding for now. No real clear intent, as it's now back firmly inside of the higher time frame consolidation. It's at the low end of the premium zone of this range, so top end of the range, if it is a range from a volume profile perspective since the lows. Still trading below 92. Getting above and holding above 92k is the key for BTC to be able to run towards its highs, and especially there's an inefficiency. Main one would be this flat high from Wednesday. So off of Wednesday's open, we saw price just dump straight down. Could be an area for price to target on a retest if we see some upside. Downside levels, pretty simple. I think back to yearly open, which is also the point of control if price can't break above 92. So any failures of 92 and then below our current levels should take price down into the yearly open, get above 92 up to the Wednesday open to either consolidate for higher or reject from. So those are the levels I'll be watching. Catalysts coming in, two of them. Number one is going to be at 130 UTC, and then Supreme Court ruling. It's going to be interesting with, normally the biggest thing that would be happening today from a data perspective would be the jobs data. So the non-farm payrolls and the unemployment rate, which comes out before the session. But then you've got New York open, and then you've got that Supreme Court ruling, which is at 3 p.m, which I think is going to be much more on the market's mind today. So you'll definitely see some movement, as there always is around that jobs data. I'll be watching ES and BTC for that, around those two levels, 130 and 3. And from there, seeing where we finish up the week. For stocks in particular, for SPY and for ES, can they make and break new highs and hold? So earlier in the week, ES touched 7,000 for the first time. Is it able to close the week without a failed break? Or are we going to close below the highs, which would set up a potential for a deeper correction next week. And at the same time, other things that would be sensitive to, especially tariffs, would be like gold. Gold had its really big move last year during that first wave of tariff. That was when everything else was selling off. You saw gold strong through February, March, into April, peaking right around the time of the bottom in the stock market and the bottom for crypto, as the tariff panic really peaked. So I don't think there's going to be as much of a catalyst for a full-blown panic off the back of this. It's less of a shock to the markets. It's more time to digest it, price it in. We've already seen a full year as well, a full year of what the tariffs look like in their current form. And so it will certainly have an effect, mostly for lower time frame traders today initially. So I'll be watching local levels, like the overnight level for ES off of Thursday's close, right into the just after Thursday's session close, and into this morning for ES, watching 69.77, and then the lows of this morning and yesterday's session lows right around 69.50. For gold, 49.94, so anything below 4,500, and then the open around 44.60. And with Bitcoin, those levels are capping at around 91.5 and 89.5. So you're watching those extremes in the lower time frame as we go through the data release plus the headline, and then watching where price follows through. Dollar as well has been fairly strong to start the year. You've seen this right from Christmas Eve. Dollar bottomed out. It's been steadily rising all the way through that. Daily chart starting to put in what looks like a nice, after a double bottom, runs up, comes back. Seems like a higher low at this point. Could potentially see dollar running back towards 100 again. Big resistance there is, of course, the 2023 lows. And if we start to see a broader dollar rally this year, that's going to have a knock-on effect for risk assets as well, and for gold. Typically, dollar up should be negative for both of those. I think today is going to give us a little bit of a clue of that going into the weekend. So that's it. Low time frame volatility expected. Higher time frame, most things are in consolidation, not trends. So expecting whipsaw and more directional moves will be next week.
So yesterday what happened was just before 10 a.m. news, we rallied up, news came out, order flows came in, sellers came in the market, and the market dumped for the news. What I'm seeing now is pre-market rally up before 9:30 market open, sellers come in, retracement. Just gonna keep an open mind today because I have no idea what's going on, right? We were trending in pre-market, slightly trending up before the big news today. I guess Supreme Court ruling for Trump tariffs. It's likely to be in his favor, which might be good for the markets, right? Basic overview for markets is tariffs are bad, but if they rule in favor of the tariffs, then it could shift the market dynamic to good, which is bullish, I guess. But right now it's just low volatility or low order flows until 9:30. But I am seeing like a swing trade. We're getting a deep retracement on the 15-minute chart. So to take a long right now, right here, is a good area, but honestly, this would be a better area to long the market if we reach those levels for a swing trade. And then stop loss like down here below these liquidity levels, targeting these highs. That's what I would see for a swing trade, but we're not swing trading. I think it's going to be a good day. I have a good feeling it's going to be a good day. We're going to be able to read the order flows well, wait for candle closes, and take action when we need to take action, especially following our risk rules. We'll allow for 2 trades today. I'm feeling we'll have one win, and we'll call it, possibly funded, 1 loss, and then 1 win, or 2 loss. We'll see what happens. But that 10 a.m. news will be interesting because there's definitely going to be a lot of volatility at 10 a.m. And that 10 a.m. candle on the order flows, we'll see if it's bullish or bearish. Especially like at like 9:59, if it's bullish, we enter in for a long, or if it's bearish, we enter in for a short. Buyers in control, sellers in control of the news. News comes out, we make their way in that direction. We'll see what happens. The market opens in about 10 minutes, 8 minutes. We have to take any trades. I want to be ready, so let's just open up Top Step. Just give me a second here. If we can open up Top Step, that would be great. Okay, market is about to open. Let's see how US is doing. Seems pretty correlated today. It's back in this mini range. Markets are open. I don't think there's going to be any trades off rip. I mean, M&Q is saying lower. That we're trending down. We broke this mini range. We came back into it. Bearish into news and bullish after news. I don't know. M&Q is saying go short. Has to break this range too. M&Q is short. Do we short M&Q? I think we pretty much have to, right?
Order filled.
We're in M&Q. Why my bracket's not on? That's a little bit concerning. We have to put the brackets on, bruh.
Order filled.
Why the brackets not on, bruh?
Order filled.
Okay, we're in. Sellers are trending down. Let's see how this goes. Sellers are still in control of this market. We had a long extension down. So I guess we're betting on that continuation down. We have these liquidity lows at 25. So we might be moving, stop to break even pretty soon. Like this is take profit areas like around here. 25.59. So yeah, we'll see if we can break these lows here. And that will be good. Strong sellers. Hopefully this can close bearish as well. But we're just gonna save a picture of this.
Order filled.
Oh, we got stopped out. We got stopped out. That's okay. Just mark that down. So you get one more trade for the day. Buyers coming back in. We'll see. Looks like a tricky market today. Yeah, I didn't like how price was like overextended. It already went short, overextended, and like we pretty much just entered in at the bottom. See, that's happened multiple times with this system. So it's better if we wait for that consolidation and then the breakout instead of entering the continuation, because it needs a stronger pullback, right? That's all good. First of all, buyers. 5 minutes. See how ES is doing. Came down, then came all the way up. This is the swing trade, as I was saying. The move is on MNQ and ES today. Price is back in this range. Boom, 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 boom. Taking a short position here would be interesting. $15-minute candle looks like it's gonna close bullish. Next 30 seconds, but we'll wait for that confirmation. A long position doesn't look too bad, honestly. think the tariff news is going to be bullish. We'll have to wait and see. Honestly, to not take another trade today, I would be completely fine with that. Can always wait for another day. We are in this range again now. So this is what I like. We're in the range. If we can get a breakout and confirmation on the 1 minute system, a breakout on the 15-minute time frame, and confirmation on the 1 minute time frame, entering on a slight pullback, then we can be in a durable trend. So these areas right here. This next like 10 minutes is pretty important for this candle to close. Okay, we broke lower. Bearish volume. So I'm gonna be looking for any signs of reversal at 9:59, especially in the order flows. Because right now it looks like it's just hunting liquidity. Yeah, it's hunting this level right here. We'll wait and see what happens. We get one more trade, but we don't have to use it. It's not mandatory. Price action is bearish. 8 minutes. Let's see how ES is doing. Ethereum is breaking it slow, kind of. Silver's just climbing up. Is there a way to keep my brackets always on? Because I did the same thing yesterday. I think that is what we wanted to do. Five minutes, 7 minutes. Might close bullish. Tariffs might be in favor for bullish. I wouldn't be surprised if it is. I feel like we should put like 3 contracts on since we had that mistake earlier. We just want to keep risk at a minimum. Would that be the correct move? I think it might be. I'm going to do 3 contracts because I made that mistake by not having the brackets on for the first trade. So to stay within the risk parameter rules that I promised, I said 2 trades, and that means $500 risk total. So I'm going to downsize to $150 risk. So yeah, 3 contracts. I have 2 minutes. Might be bullish. Might close bullish. We'll have to see. Let's see what happens. I think it's gonna close bullish. Thirty seconds. It closes bearish. $10 a.m. news is out. We're still in the range. We're moving bearish. Looks like we're making a move for lower prices. It's really hard to tell. We're still in this. We haven't like really moved anywhere really. We're still just in here. Still nothing to do, eh? break. It's holding just below that level. I feel like shorts are good, but so your price is going to continue holding just below this range, and it's good, but we close back into that range, so we have to be very careful about placing a trade that we will regret, right? Because we want to make the journal look good as well. Let's note it. Looks like we're about to close lower. Yep, we're about to close lower. Or, no, we're not. We still have 8 minutes. Still mean reverting 1 minute. There's nothing. Swing trade on ES. Oh, ES just had its little dump. Had that break. Looks like we're moving short. I would want to wait for a pullback if we are confirming a short trend. Still have 7 minutes. Like this could come right back up. But if it comes back to these levels, if it closes, comes back to these levels, if it closes below these range lows, that's fair. That's bearish. Order flows bearish, right? But we have to see. We just have to wait and see. All right, see, we're still nowhere. We're still nowhere. Looks like we're breaking lower. Looks like we want to trend low. Markets are looking bearish. Two five 700. 25700. Let me sell 3. Man, I don't like why this is all like messed up and stuff. So we got a limit order on. We might not get filled, which is completely fine. But if we do come back to that 700, would be a nice retracement.
Order filled.
We're filled. But yeah, we'll see how it goes. Three contracts, 41 points. We want it to be 25 points. and move stop to break even. But we'll take a picture of this, download image. I go right back into that range though. We broke its low, but it just looks like a grab of liquidity at this point. Yeah, I think we probably close off for the day. Should have waited for that candle close again, but the market's still bearish. The sellers are still in control.
Order filled.
So yeah, we're stopped out. That's minus 600. Damn. Yeah, the trade didn't even really. Nah, definitely not good. Yeah, it looks like we're mean reverting. So you didn't wait for that candle close. Look, fuck. We're in this range, right? So I'm gonna wait for a crossover.
Order filled.
Yeah, we're just mean reverting right now. It's the last trade, bro, and then I'm just out. But like the odds of this mean reverting is pretty high, so place a trade, or just gonna leave it on. Let's just journal right now. When do we enter? 12:10. $11, $12, my bad. 10:12 a.m. Strategy, breakout, pullback entry. I don't even. Price action wasn't there. Nothing was there, man. I committed to this trade already, so if we get stopped out, then we get stopped out. Committed to a mean reverting setup. That's the setup that I committed to.
Order filled.
Another loss, guys. Three trades going short. Loss, loss, loss. Minus 250. That's pretty bad. So we gave back all of our profits from yesterday, and added a loss onto it. So that's pretty bad. And we're about to start trending on the 1 minute. I've already broken my rules today. So I believe we should just call it a day. Like, I want to take one trending. If it starts trending, I want to take the setup and recover. Huh. We didn't even downsize risk, bro. I wanted 150 risk, not 250. I made numerous mistakes today. That mean reverting setup was so stupid. It was really dumb. Man. Gotta be the last trade, bro. Dog, drink some water. Dog, drink some water. We're gonna wait for 45.
so it's a kid-free night.
Made that reversal move though.
Hey guys, today's January 9th. It's a beautiful Friday, and I want to do a lecture on experience points because I have a student who asked me a question, and essentially he said, "Hey Luke, so this client from 1 year ago owes me $3,000, and I'm in a bad financial position. I could really use that money. How can I get this money back from this person? How can I convince this old client of mine to finally pay me $3,000 after a year?" And my answer probably surprised the student because my answer to the situation is just to get over it, assume he'll never pay you the money, and just go try to get new clients, right? And I'm sure my answer surprised a lot of people because a lot of students will say, "Hey, Luke, I've just been scammed. I accidentally sent $10,000 to this crypto scammer and I didn't know. What should I do? How do I get it back?" And again, I'll always tell these students, look, don't try and get it back. It's lost. Focus on making some more money. And I'm sure students wonder why. And the reason is experience points. Because I want you guys to imagine the amount of time, energy, and effort that would be required if you truly tried your very best to get your $10,000 back from a scammer. Let's say you tried every trick in the book, you tried threatening them, you tried guilt tripping them, you try this, you try that. Let's say you try every single thing in the world. Well, what will you get from that experience, right? And I'd argue that you get very little from that experience. And I would argue that if you were to spend the next 2 weeks trying to get $10,000 back from a scammer and you failed to get the $10,000 back, I'd argue that not only did you lose $10,000 to that scammer, you also lost 2 weeks of your time. You also lost 2 weeks of opportunity, 2 weeks of experience points you could have been at making new money. You start to realize that, you know what, I lost money here, that was a big mistake, let me just go make some more. because you start to get very, very good at it. Your time starts to become more valuable because now you know how to make some money. And how do you ever get to that level? How do you get to the level where any moment when you wake up and you say, you know what, I want to make some more money. Before you go to bed, you've actually made more money. How hard do you think it is to get to that level of experience? How hard do you think it is to get to that level of skill level? Obviously, it's very difficult. And that's why that's the only thing you should be doing. If any of you guys get scammed, just move forward. They won, they got your money. The success rate is so small, and if you fail, you not only would have lost the money, you would have lost the time too. The best thing any of you guys can ever do, if you feel like, oh man, I don't have enough money, I'm going through a hard financial time, I really need to get some money. Cool. Go try to close some clients. Go try to sell your product. Try to sell your service. Because even when you fail trying to sell your product or service today, at least you will have gotten a little bit better at it. At least you would have gotten those experience points. Experience points are the foundation of what makes you as a person. It's the foundation of leveling up as an individual. If you want to be very, very skilled at the art of making money, you need to spend so much of your time dedicated solely to the act of trying to make some money. Don't spend your time on anything else. Trying to get money back from your scammer, that's a waste of your time. Even if you get the money back, I would argue that the time you wasted to do that was not worth it in the long run. If you spent 2 months trying to get this scammer back and you did this and you did that, it's like, bro, was your time really worth that amount of money? Was 2 months of your time really worth it? Because I can almost guarantee you the answer is no. You can solve all of your financial difficulties if you just try to make some money today. You can solve all of it. Even if you fail, even if you don't make money today, at least you'll be better at the skill. Because once you are the king of making money, once you are very skilled at making money, you'll never worry about finances ever again. So that's the end goal. The experience points is everything. The experience points is what you should be going after. The experience points is what you should be chasing with every single second of your time. If you have any financial issues, the answer is very simple. Try to close a client today. Try and get a sale of your product today. Try to get a sale. Try to get some money in. Try. Because even if you fail, you get the experience points, and it will make it so that when you try again tomorrow, your chances of success are higher. You'll get more experience points, and next thing you know, maybe 1 year, 2 year, 3 year, 4 year, 5 years down the line, now whenever you wake up and you say, I'm going to try and make some more money today, you're really, really good at it, and you actually do. Hopefully this makes sense. Hopefully this helps. And for your assignment for today, I want all of you guys to think, how can I get a sale today? How can I make some money today? How can I close a client today? And then go do it. Go get those experience points.
Please, Lord, let this be a good trade. Please, Lord. Move stop to break even. Please, Lord, we're risk free. Okay, we're risk free. We are back. Followed it. We're good. We're good. Risk free. This is good. Good trade. Risk free. Good trade. I want to target this 7K range, but we're risk free. This is good. Risk free, trend continuation, higher time frame, risk free, price action in order. Everything is good. Everything is good. Everything is good. This is a much better trade. This is the setups I should be taking, and regardless of the outcome, I'll be much happier with this trade. So we'll see how it goes. Regardless of the outcome of this trade, I'm risk free. I'm just a way better trade than would have been taken today. So I can handle this. Come on, baby, it's risk free. Come on, baby, be bullish. Be bullish, my love. Bullish, my love. We had a healthy retracement. You want to stay around here? Just be bullish, my love. Please. Bullish.
Order filled.
Alright, we're out. We're out. I don't know, guys. I don't know. There's nothing here. I mean, it was plus 25. I made $25. We need this to close bullish.
How can I get this money back from this person? How can I convince this old client of mine to finally pay me $3,000 after a year? And my answer probably surprised the student, because my answer to this situation is just to get over it, assume he'll never pay you the money, and just go try to get new clients, right? And I'm sure my answer surprised a lot of people, because a lot of students will say, hey, Luke, I've just been scammed. I accidentally sent $10,000 to this crypto scammer, and I didn't know. What should I do? How do I get it back? And again, I'll always tell these students, look, don't try and get it back. It's lost. Focus on making some more money. And I'm sure students wonder why. And the reason is experience points. Because I want you guys to imagine the amount of time, energy, and effort that would be required if you truly tried your very best to get your $10,000 back from a scammer. Let's say you try every trick in the book, you try threatening them, you try guilt tripping them, you try this, you try that. Let's say you try every single thing in the world. Well, what will you get from that experience, right? And I'd argue that you get very little from that experience. And I would argue that if you were to spend the next 2 weeks trying to get $10,000 back from a scammer, and you failed to get the $10,000 back, I'd argue that not only did you lose $10,000 to that scammer, you also lost 2 weeks of your time.
Hello? What's up? How are you? are you, my Chloe? Just sleeping? Sleeping like a monkey?
Oh my god.
Have good dreams? No?
I don't think I had a dream.
It's okay.
Order filled.
bless you.
Oh boy.
Boy, oh boy. Tough day.
We haven't tested the low end. And so as we play it on, about them through the lens of Wyckoff theory, and now we're going to apply it to the charts. Not every range will form and look like a Wyckoff schematic. That doesn't matter for us to trade. What we know is is the rule of markets is that they trend, then they consolidate, then they trend again. So in that consolidation, a range will form. And if a range forms, we can trade it. We also know that the market spends more time in a consolidation phase than it does in a trend. So it spends more time ranging, and therefore we can get more opportunities in ranging markets than we can in trending markets. So let's do it. I'm using bar replay to watch one form as if it were in real time. We can talk through it as it forms what you want to look out for. There are rules, 4 simple rules for range trading that I have. The first one is you want to see a 75% retracement of the previous leg down. Okay, so that means you let price form a swing high, which is here. So this was the previous swing high. Then, as you'll see, price breaks below it. So we are still in a confirmed downtrend. For continuation of a trend, price should not retrace more than 61.8% generally. So if price retraces, meaning if it bounces up more than 75% of this leg, we can consider it to be the beginning of a range. So let's wait for price to bounce. Price is now bouncing. So as price is bouncing, we want to get our fib tool. We want to put it from the high to the low, and there we have our range. So my fib tool is set with these settings: 0, 0.25, 0.5, 0.75, 1, 1.2, and minus 0.2. The reason for that is because ranges form in a linear fashion. So you have 0, a quarter, a half. The half is always a good turning point. 3/4 and 1. The reason for that is because your 0 to 0.25 is where you can consider it to be discount. It's cheap. And then 0.75 to 1 is your premium. It's expensive. So you buy discount, sell premium. We'll get onto that in a moment. Right now, we have not got a confirmed range. We are waiting for a close, candle close, which is why I'm on line chart. It's easier to mark them out on line chart as you're watching. As soon as we get a confirmed close above 75, our range is set. There we have it. This was the close of the range. So this now means we're in a high probability range. This is not range high. So now all we wanted was this retracement. We now delete this. Now our range will form from the bottom to whichever top we have just made. Okay? So our potential range low is here. And our potential range high at this point is here. I say potential because we need one more thing. We need a market structure break to confirm that this is in fact a range high. So I put this in a dashed line. This is the market structure level. You'll know from the market structure lesson that you have a low, you have a high, you have a higher low, you have a higher high. So if price breaks below this dashed blue line, that will be a market structure break, meaning it is not trending. And that gives us the second confirmation that we need that it's in a range. First confirmation is the 75% retracement. Second confirmation is a market structure break, which confirms we are not uptrending, and it confirms our new range high as being here. Let's see if that forms. Of course it does, because I'm on replay mode. And so, we have a market structure break. Good. Now we can consider this to be our range high. Range high. And this is how you mark it in real time. And then we have range low. Now, what do we want to do next? Next, we want to look at, that would be a market structure break. There we have it. This was the close of the range. So this now means we're in a high probability range. This is not range high. So now all we wanted was this retracement. We now delete this. Now our range will form from the bottom to whichever top we have just made. Okay? So our potential range low is here. And our potential range high at this point is here. I say potential because we need one more thing. We need a market structure break to confirm that this is in fact a range high. So I put this in a dashed line. This is the market structure level. You'll know from the market structure lesson that you have a low, you have a high, you have a higher low, you have a higher high. So if price breaks below this dashed blue line, that will be a market structure break, meaning it is not trending. And that gives us the second confirmation that we need that it's in a range. First confirmation is the 75% retracement. Second confirmation is a market structure break, which confirms we are not uptrending, and it confirms our new range high as being here. Let's see if that forms. Of course it does, because I'm on replay mode. And so, we have a market structure break. Good. Now we can consider this to be our range high. Range high. And this is how you mark it in real time. And then we have range low, 0.75 to the top. That is our premium zone. We've set now our discount and premium zones. The last thing I need to remind you about is the 20% rule. I've touched on this in other lessons. The 20% rule relates to ranges, and it is putting 20%, as you would imagine, either side of the range, and that is the maximum deviation you can have and remain within a range. Okay, so if price goes below the range low but doesn't close below 20%, it is still considered a range. Same with the high, and this is where you can target high probability liquidity sweeps fake outs, and the such. So let's play it on. We can now look, for the first time, I would say it's okay now to look at the candlesticks, because there's one other thing we want to add on, which are liquidity sweeps. So now putting the candlesticks back on, you also want to mark the wicks, because range low is where the close is, but your candlestick is where the liquidity is. So that's liquidity. And so your candlestick wick will be where liquidity is, because traders put their stop losses below wicks and above wicks. And here was one that was already completed. So we had liquidity here, which got swept. You see that we set our range high, we came down, we swept above it, and then we broke down. After breaking the structure level, we then hit into the discount zone. So after this break, your next candle, you could have bought here if you had a setup. It is now valid to buy, even that wick into there, it is valid to buy if your system tells you can. It doesn't mean you just automatically buy there. Of course not. But let's play it on and just see how price respects within a range. Okay, you've range low, you've got liquidity, you've got the 20% rule being respected so far. You see that? We had range high, it deviated above it, it did not go above 20%. We haven't tested the low end. And so as we play it on, we see that there was an initial bounce. So here it has rule being persistent where the close is. We get high probability liquidity sweeps, fake outs, and the such. So let's play it on. We can now look, for the first time, I would say it's okay now to look at the candlesticks, because there's one other thing we want to add on, which are liquidity sweeps. So now putting the candlesticks back on, you also want to mark the wicks, because range low is where the close is, but your candlestick is where the liquidity is. So that's liquidity. And so your candlestick wick will be where liquidity is, because traders put their stop losses below wicks and above wicks. And here was one that was already completed. So we had liquidity here, which got swept. You see that we set our range high, we came down, we swept above it, and then we broke down. After breaking the structure level, we then hit into the discount zone. So after this break, your next candle, you could have bought here if you had a setup. It is now valid to buy, even that wick into there, it is valid to buy if your system tells you can. It doesn't mean you just automatically buy there. Of course not. But let's play it on and just see how price in a range. Okay, you've range low, you've got respected so far. You see that? We had range high, it deviated above it, it did not go above 20%. We haven't tested the low end. And so as we play it on, we see that there was an initial bounce. So here it held, it pushed right up into our premium zone. So it went from discount all the way up to premium. There is one trade that could have been had if you had lower time frame entries, right? From your 25% area up to your 75%. It then a strong rejection. We then push down towards range low through the range and towards the other side. We then reject one more time as I drag this across, just to make it clear. We then reject off of our premium zone one more time, which leads to a strong move down and a break of the range. So all the way through here, we have the principles that we look for. Number one, we started off with the most important thing, which was a 75% retracement of the previous leg. That gave us our first clue that we were in a range. Second, we got a market structure break, which confirmed that this was our new range high. Third, we set our discount and premium zones, green and red. Fourth, we look for liquidity sweeps. We got one here and we got one here. Then you are able to trade within that. So you can take that and make trades off it. Maybe you trade after liquidity sweeps. The best time to trade is when you have a liquidity sweep. So here, we sweep the low, we come back inside, you don't touch it yet, it comes back and it retests the discount zone. So anywhere in here, you had a sweep, you then retest the discount zone and you trade it to the premium zone. And maybe you leave some on and possibly trade it towards liquidity at the highs. That's up to you, personal preference. This isn't about building the full strategy for you, this is showing you how to trade a range. But what you would do is, you would take your position tool, you know you had a sweep, you're getting entry somewhere on the retest here, you know where your risk is defined because there is a low that was set, you're trading it up to the other side, which gets you positive risk reward between 2.75, 3.25, a nice range trade. These repeat over and over and over again, all the time on different time frames. So you take the principles, take the 4 rules, use them, put them together, test many things out, and that is how you trade a range. We then reject off of our valid buy if your system tells you can. It doesn't mean you just automatically buy there. Of course not. But let's play it on and just see how price respects within a range. Okay, you've range low, you've got liquidity, you've got the 20% rule being respected so far. You see that? We had range high, it deviated above it, it did not go above 20%. We haven't tested the low end. And so as we play it on, we see that there was an initial bounce. So here it held, it pushed right up into our premium zone. So it went from discount all the way up to premium. There is one trade that could have been had if you had lower time frame entries, right? From your 25% area up to your 75%. It then a strong rejection. We then push down towards range low. We see the price holds the range level. It sweeps the liquidity. Notice this. So it holds the range level and it takes out the liquidity and it respects the 20% rule. So far, a very strong and valid range. We let it play on. Price now moves up through the range and towards the other side. We then reject one more time as I drag this across just to make it clear. We then reject off of our premium zone one more time, which leads to a strong move down and a break of the range. So all the way through here, we have the principles that we look for. Number one, we started off with the most important thing, which was a 75% retracement of the previous leg. That gave us our first clue that we were in a range. Second, we got a market structure break, which confirmed that this was our new range high. Third, we set our discount and premium zones, green and red. Fourth, we look for liquidity sweeps. We got one here and we got one here. Then you are able to trade within that. So you can take that and make trades off it. Maybe you trade after liquidity sweeps. The best time to trade is when you have a liquidity sweep. So here, we sweep the low, we come back inside, you don't touch it yet, it comes back and it retests the discount zone. So anywhere in here, you had a sweep, you then retest the discount zone and you trade it to the premium zone. And maybe you leave some on and possibly trade it towards liquidity at the highs. That's up to you, personal preference. This isn't about building the full strategy for you, this is showing you how to trade a range. But what you would do is you would take your position tool, you know you had a sweep, you're getting entry somewhere on the retest here, you know where your risk is defined because there is a low that was set, you're trading it up to the other side, which gets you positive risk reward between 2.75, 3.25, a nice range trade. These repeat over and over and over again all the time on different time frames. So you take the principles, take the 4 rules, use them, put them together, test many things out, and that is how you trade a range.
important to remember, even though this might be a reversal, it could also be continuation. You're not trying to guess the future direction. Remember, as a range trader, you are trading the range. You're not trying to say, I think this is going to go down or going to go up. If the trend has ended, it will go to a range. It could range for much longer than you think. You want to identify a range high, identify a range low, then look for a high probability range, which is a double confirmation. So you had your 75% retracement, you then get something like this, a false breakout. That is then your trigger to get long, in this instance, targeting the other side of the range. Your trade then becomes everything in between here, in that area. Going into specific entry techniques will come in a lesson to come, a lesson coming in a later part of this module. However, for now, that's what you need to know. You need to understand how to identify a high probability range. And marking those levels is your first step to that. So 75% retracement, mark this as your range low, mark the other one as your range high. Now, just for sake of completeness, let's find a range the other way, where we come down into it, right? So here's a range high, or sorry, here's a high and a low. And do we get a retracement there? So same thing happens. Same exact thing, okay? You had the high of this move all the way down to the low here. If I draw this across there. High, low, price comes up, taps the 75. That's considered, we're now considering this as a range. This becomes your range high. This becomes your range low. So I'm just showing this the opposite way around. As for one coming from a downtrend into a range, and we'd already seen one as an uptrend into a range. So 75% retracement, you can then get rid of that. We don't care about this last leg. As soon as you get your 75% retracement, you don't care about this high. You can leave it there, it's a good liquidity level, maybe target it, but the importance of range trading is we've got our 75% retracement, we then move on and we wait for our high probability range confirmation. Again, this comes in the form of a false breakout, which when confirmed to the other side, when confirmed as a false breakout, price goes to the other side. That's all. So that's the simplest way of identifying ranges. There are many, many, many other ways to identify ranges. Okay? Ranges can form in so many different ways, but for the purposes of bootcamp, purposes of this system building, you're going to focus on those two simple rules: a 75% retracement and a false breakout. To begin with, mark the levels using your range low and your range high. Next, we want to mark our discount and premium zones. So again, same principle, you get your range low and your range high. You drag your fib tool across and you have it set with 0, 0.25, 0.5, 0.75 and 1. Now it should actually be the other way around. Doesn't really matter, but just to be clear, I'll draw it like that, because your 0.25 is the low end and your 0 is at the bottom. And you consider this to be a discount zone. So you draw it as a box using a rectangle tool. You make it green. You draw one up the top. You make it red. And you can draw it all the way across for however long price action extends. Right? These are simply visual aids for you to visualize the range itself. This becomes the area where you would buy. So, why is that important? Well, you had your range low confirmed, you have your range high confirmed. Price then comes down and it does the false breakout. So in this instance, this false breakout leaves a long wick and a candle closes back inside. on the very next candle, there was another wick down into the green zone and within the green zone. The idea would be, as part of your actual entry technique, you can say, if it's in the green zone and has a confirmation of a false breakout, I can enter along. Okay? That's the whole purpose. So your green zone is where you buy. Your red zone would be where you short or where you sell. Of course, your initial target, if there's a false break on this side, will be to target the liquidity on the other side, which it hits by taking out the range high. However, if you're looking for shorts, because you don't have to, the great thing about ranges is you don't just have to take one trade. You can often trade from both sides of the range a few times before it moves on to the next trend. So simple rule of thumb. You want to set your green zone up so you buy in the green zone, sell in the red zone. Those are your levels for both a downtrending into a range and uptrending into a range. You've got your 75% retracement. That's number one. You want your high probability range confirmed by a false breakout. And we're going to talk about false breakouts in our lesson. And then you want to mark then finally your discount and premium zones in green and red. That now helps you to visualize your range and you can move on.
GM. So I'm going to explain in this lesson one of the most commonly asked questions I get, which is about how do I redraw my range levels? When do I redraw them? If I'm drawing a range, when can I move the range high? When can I move the range low? So I see variations of this question frequently. So here's the simple answer. The first answer is it's subjective, right? You can choose to draw whatever you want to draw. Second part of this answer would be you're not going to draw it all perfectly right at the start, but your goal should be over time to gain a greater understanding, right? So you don't have to right away be an expert in drawing ranges, but over time you should try and reach that level of understanding. So I'll do it on this first, then I'll show it on the actual chart. Using your fib tool, and you've got your 0 to 1, and then you've got your 0.2 either side. So you've got 20% deviations to the upside and to the downside. That's a minus 0.2 and a plus 1.2. So let's imagine price comes down into what looks like a range low and then a range high. Okay, so your question is, where or when do I redraw my range level? If I get a false breakout there and it comes back inside, do I now have to change? If my range low was previously here, if this was previously my range low, and this was previously my range high, right? Do I wait and see what happens?
Weeks of experience points you could have been gaining instead. This is why my answer is always go make some more money. I genuinely believe once you become very, very good at making money, once you're very experienced at making new money,
Okay, guys, I'm gonna end the stream there. I'm gonna do my summary and finish my Notion journal. Just by myself. I'm gonna get ready to go to the gym, go eat. That's it for the day. I learned a lot. I have a lot of reflection to do this weekend. I feel like I gained more than I lost today. I definitely learned some valuable lessons. Friday was a very important day. So, thanks, guys.